suggest, no technician, and I don't offer any opinion as to whether we're at or about to break out. I would take issue with your statement that gold has really moved. Gold has moved from what, 1800 to 22 and change? The
Yeah,
move is what occurred in the period 2000 to 2010, where it went from
right,
$250 to $1,900. I
right.
don't go personally because I think it's going to move from $2,200 to $2,500. I couldn't care less. To me, that's static. Music is gold moving from $2,000 to $7,000 or $8,000. By the way, I don't want this to occur. The set of circumstances that causes it to occur creates problems in our life, and I would prefer not to have problems in my life. I'm old and fat and rich. I don't want that. But I believe that the set of circumstances is in place that was in place in the 1970s and in place again in the first part of the decade of 2000 to 2010 for gold to make a real move. I don't mean a $30 move or a $40 move. I mean a real move. I believe, too, that what you've seen in silver is more a dead cat bounce than anything else. Technicians would say it formed a long base. What I would say is very different. I would say the sellers got tired.
Right.
You run out of supply when you've taken out all the supply. It's interesting to note in the gold market, which you correctly surmise needs to precede the silver market, the buying in the gold market has not been individuals. In fact, individuals have been a net seller through the gold ETFs. From a contrarian point of view, that's good. That means gold is still hated, despite the fact that it's performing. The buyers of gold have been central banks. The cause of the gold move isn't the incipient understanding of inflation, but rather the weaponization of the US dollar. The stealing of $300 billion worth of Russian assets in US treasuries by the US government does not make other governments, particularly those who might be perceived as hostile towards the US, to continue to hold US treasuries. The weaponization of the US dollar through the SWIFT banking system, the attempt by the US government to export their values extraterritorially through the dollar has led to a circumstance where foreign governments have no choice but to sell their dollars and buy gold. If you combine the impact of the weaponization of the US dollar and the decisions it forces on our trading partners with what I believe is the upcoming realization by all holders of US dollars, including American holders of US dollars, that the diminishment of their purchasing power relative to the interest they receive in US treasuries is negative, that's when you get a move in the gold price, a real move in the gold price. And after you see the real move in the gold price, you'll see a real move in silver prices. Gold bugs now are saying, I'm seeing this all over the internet. Gold breaks out to record highs. Wrong. In constant dollars, inflation dollars, gold is still below its all-time highs. But importantly, silver is trading at half of its so-called all-time highs. It amuses me to see on the internet people, basically wet themselves with excitement that silver has moved from, $24 to $27 or something like that. That isn't what the move's about. The move's about $75 or $85. Is it going to happen? I don't know. If it does happen, when's it going to happen? I don't know. What I do know is this: there is a probability rather than a possibility that's going to happen. And if it happens, the moves that you're going to enjoy in the silver stocks, those moves, which are demonstrated by history, will justify the wait, both in terms of financial terms and psychological terms. The upside in these silver stocks historically has been goofy. Goofy. I'll give you examples. In 1970, Coeur d'Alene Mines traded for a dime on the Spokane Exchange. 1981, it was $65 on the New York Stock Exchange. Sadly, I didn't participate in that, Andy. But a little later on, I financed Pan American Silver at 50 cents with a 75-cent warrant. 6 years later, it's a $45 stock. Same year, I financed Silver Standard Mining at 72 cents with a $1.25 warrant, if my memory serves me well. It, too, in 6 or 7 years, was a $45 stock. You buy these things not for the certainty of reasonable returns on capital employed, but rather for the possibility of truly life-changing gains. You don't use an amount of money that will deprive your child of a college education or change your decision as to what to have for breakfast. You speculate within your means, and then you hang on for dear life because you experience volatility. But if you are right, and there's no guarantee that we're going to be right, what happens is truly a quantum change in your finances, one mercifully which I have enjoyed.
You know, this reminds me a lot of the uranium market that we just experienced. And by all means, I don't think it's over, but it reminds me a lot of that because I remember a couple of years ago, I was talking with some investment friends that we do this sort of thing. And we became really bullish on uranium. And I was really smart enough not to participate. It was just, yeah, it looks really good. I should buy some and get it. And I didn't. And then in June, hey, it looks good. It looks like it's breaking out. And then here we are in March 2024, and the spot price itself, more than doubled.
Yep.
And then you're looking at many of the stocks were 10 baggers.
Yep.
And so now it's like the mission of, like, I see it as what's the next rate uranium play? And I see that potentially as a silver market.
What's interesting to note is that people can understand a narrative like you did, but they can't bring themselves to action until the narrative is somehow verified or justified. That happens with price action, but when the price action occurs, the value of the narrative is less. In 2022, the uranium spot price was at $20. It had to go up. If it didn't go up, there wouldn't be any more uranium. And if there wasn't any more uranium, the lights would go off. It was that simple. You had to decide, is the uranium price going to go from $20 to $60, which was the price necessary to incent existing production? If the answer to that was no, you had to understand that 20% of the baseload power in the U.S. grid was going to go to grid heaven, which meant the lights would go off. So did you believe that the price of uranium was going to triple, or did you believe that the lights were going to go out? That was your choice. The difficulty is that even confronted with that choice, and by the way, I probably confronted 300,000 or 400,000 people with that choice in interviews in 2022 alone. If that decision was brought to you, most people wouldn't make the decision because they hadn't had the psychological verification that comes from the fact. Now that the narrative is proven to be true with price action, people want to be in the uranium business after the price has gone from 20 to 100, which is to say when the price had to go up, nobody cared. After the price didn't have to go up anymore, everybody cared. Now, I don't think that the silver case is as compelling as the uranium case, because the uranium case was a must happen. It was an inevitability. Silver is a can happen. It's a possibility. But what's similar is hate. People hate silver. People who came into silver in 2020, 2021, the sort of Reddit silver squeeze, were disappointed. There is no hate as sincere as the hate of a jilted lover. And silver has millions and millions of jilted lovers. There will be comments in social media after this interview. Why is that moron drawn on about silver? It hasn't gone anywhere. That's precisely why I talk about silver. The fact that it's hated. When the investment goes from hated merely to unhated, the easy money is made. And I love easy money.